Okay, let's talk a little bit about TAccounts. So hopefully you have watched the video that goes over what a T account is. I'm going to show you a couple of transactions here on how they are affected with the T accounts, and then you also have the examples that are listed below. Okay, so the first transaction here says Monica Geller invested an additional $25,000 cash in her business. Okay, so again, the two accounts that should be affected because she's investing cash is cash and bank, and capital since she's investing it in her business. So you'll notice since cash and bank is an asset, it increases on the debit side. So we have $25,000 debit to cash and bank. And every debit must have a credit. So capital is credited $25,000. Okay? The next one, bought a new copier on account from Martin's Copiers. Okay, so we bought a copier. That means we're increasing our office equipment. All right, and since office equipment is an asset, we're going to debit office equipment for $15,000. And since it says on account and we're buying it, that means we're going to pay for it later. It's going to go as a credit into accounts payable for Martin's Copiers. The third transaction we're going to look at says Monica Geller transferred personal office equipment to the business valued at $700. All right, so she's transferring office equipment. So again, we're increasing office equipment. So we're going to debit office equipment for $700. Okay, she is donating it, giving it to the business, however you want to look at it, so that it is now part of the business and not her personal. So we are going to increase capital by $700. The business didn't have to buy it. The business didn't have to do anything like that, so there's no cash in bank or accounts payable. Number 4 says we purchased a copier paper for $1,200. The payment was made by check. Okay, so we bought some office equipment, some copier paper for $1,200. So again, we increased that debit right here. And we wrote a check for it, so that decreases cash and bank. So we're going to credit cash and bank here. Again, every debit must have a credit. Okay? All right, our last example that we're going to talk about in here is sold toner cartridges to Mega Printer Incorporated on account for $900. Okay, so we sold toner cartridges. So that means it's office equipment that's leaving our business. So we're decreasing our office equipment. So we're going to credit office equipment $900. And we did this on account, meaning they're going to pay for it later. So that is where we have Mega accounts receivable increased a debit of $900 since that is considered an asset. Okay, once you balance all these equations out, again, cash and bank, we have a debit of $25,000 and we had a credit of $1,200, so we subtract them and we get $23,800. Office equipment, we add up all our debits and subtract our credits. We get $16,000. Capital, we add up all our credits. There was no debits, so we have $25,700. Martin's Copiers on accounts payable, we had one transaction that was a credit of $15,000, and Mega Printer has accounts receivable $900. Okay, if you were to add up all the debits, so we have $23,800 for cash and bank, $16,000 for office equipment, and $900 for accounts receivable, and then we add up all our credits, balances. So our capital is $25,700. Our accounts payable is $15,000. Okay, so if we were to total these up, excuse me, I'm apparently struggling typing. There we go. They should equal out, meaning our debits equal our credits. If you have any questions, please, please, please email me.